10 years ago, I had absolutely nothing. $0, zero assets, just a laptop and the willingness to work freelance gigs to survive. Today, I'm sitting on over $1 million in wealth. And you'll never know who I am. Surprised? Well, that's exactly the point. Welcome to Undiscovered Millionaire, where an introvert who actually built real wealth shares the unfiltered truth about this journey. Most finance YouTubers want to sell you something. I'm here because financial literacy and management isn't just important. It's a mandatory life skill you absolutely must master. So come with me on this ongoing journey, where I'll share not only how I built real wealth, but also how I'm continuing to grow it every day. Let me be completely honest with you. In 2015, I had just finished school and hadn't even started university yet. I wasn't some finance genius, nor was I born into money. I was just someone who started freelancing in digital marketing because I needed to cover my expenses and chase my dreams. But before I could even think about investing, I had to master the most fundamental skill: saving first. Look, I need you to understand something shocking. According to recent research, nearly 1 in 4 Americans, that's about 24%, have zero emergency savings. Zero. And here's what's even worse. Over 1/3 of Americans cannot weather a $400 emergency expense, let alone start investing. But here's what I realized early on, and this is crucial. You cannot build real wealth staying in just one lane. The people who think one income stream or one investment strategy will make them rich, they're missing the big picture entirely. See, most people don't have patience. They want quick, big returns without understanding that wealth building is about calculated risks, not gambling. They can't see beyond next month, let alone next decade. Let me share what science says about this. Research shows that patience is actually a stronger predictor of investment success than intelligence or market timing. Think about that. Patience beats smarts. The investors who panic and sell during downturns are usually the ones who lock in losses and miss the recovery rally. Look, I need you to understand something that every finance influencer glosses over. Before crypto, before stocks, before any investment strategy, you must master saving. Saving gave me the foundation to build everything from. Without the discipline of putting money aside consistently, none of this would have been possible. You can't invest what you don't have, and you can't build wealth if you spend everything you earn. In those early freelancing days, I wasn't making much, but I made it a rule. No matter how little I earned, a percentage always went to savings first. Not after expenses, not after treating myself, first. Here's the truth. If you can't save $1 out of every $10 you earn, you won't be able to save even when you're making 10 times or 100 times more. It's not about the amount, it's about building the discipline. This isn't glamorous content, it won't get millions of views, but it's the foundation that everything else builds on. You cannot skip this step and expect to build real wealth. And here's why this matters. Once you have that savings discipline down, once you've built up some capital, that's when you can start taking the calculated risks that actually build serious wealth. Here's my core belief, and this might go against everything you've heard. Don't be afraid to take risks, but make sure every single one is calculated and purposeful. Research shows most retail investors lose money not because they take risks, but because they fail to calculate and manage them properly. Professional investors look for risk-reward ratios of at least 1 to 2. That means for every dollar risked, they expect $2 back. And I apply the same mindset when growing my portfolio. The real world markets, both stocks and crypto, they don't care about your fancy technical indicators or your perfect chart patterns in the long run. They respond to economic fundamentals, to real world events, to actual value creation. Academic studies prove stock returns rely heavily on real economic activity, inflation, and money supply changes rather than technical chart signals. Understanding these fundamentals helped me plan for market cycles instead of reacting emotionally. 2016 was when I first touched cryptocurrency. And let me tell you something. I didn't make money through some high-risk trading strategy or by chasing moonshots. I got into ICOs in 2017. Yeah, that Wild West period when everyone thought they were going to get rich overnight. But while others were gambling, I was going through white papers, calculating. Then came 2018. Crypto crashed hard. Everyone was panicking, selling everything, calling it a scam or a bubble. Honestly, I was worried and pretty devastated too. I'd never seen losses like that before. But despite how I felt, I didn't sell a single dollar. I just held on, even when it felt impossible. 2022? Same story. Another massive crypto winter. Another wave of panic sellers. Look, it still wasn't easy watching those numbers drop, but this time I was more prepared mentally, still holding, still believing in the long-term fundamentals. Why? Because I had done my homework. I understood the economic factors driving adoption. I planned for these cycles, not against them. Most of my wealth today came from crypto investments, but here's the key. It came from understanding the bigger picture and having the emotional strength to stick to my plan when everyone else was losing their minds. Now, let me confess something. In the early stages, managing emotions was incredibly difficult. Watching your portfolio swing up and down by thousands of dollars, it's terrifying when you're not prepared. But here's what research shows. Loss aversion makes us feel losses twice as painfully as gains feel positive. That's exactly why emotions run so high during market downturns. But I learned to get used to volatility by expecting and planning for it ahead of time. When you calculate risks properly beforehand, when you expect volatility in your planning, that scientific approach dramatically reduces stress during short-term market chaos. I've always been someone who loves playing with numbers, who plans thoroughly. I made it a habit to calculate everything because taking responsibility for your financial future means you can't wing it. And honestly, as humans, we need challenges to feel alive. This isn't about greed, it's about growth, about financial freedom giving you more options in life. Here's something that might surprise you. About 1/3 of my wealth came from active income, that digital marketing, freelancing, and the small business I built around it. 2/3 came from investments. Research confirms multiple income streams don't simply provide security, they accelerate wealth building. Studies show that diversified earners reach financial goals faster than those relying on just salary or just investments. But here's the thing most people get wrong. They think you need to choose one or the other, active income or investments. High risk or low risk, crypto or stocks. That's simply not true. You need to stay in the middle of extremes, otherwise you won't see reality clearly. Currently, I'm leaning more toward lower risk investments, heavily diversified, because my strategy evolves as my wealth grows. There's no exact method, it's a journey, and you have to plan differently at each stage. Look, I want you to understand something fundamental. More wealth doesn't make you greedy. It means you've contributed more value to the world. Fair-earned money is simply a reflection of the value you've given to other people in return. But financial and investment management, it's not easy. Anyone who tells you otherwise is lying. However, when you understand the concepts and the logic behind them, it becomes manageable over time. That's what I'm here to help you with. I'm going to share real-world scenarios, explain exactly what I did to achieve this over the last 10 years, and take you along on my journey toward the next targets I've set. Initially, my target was $1 million. I thought I'd retire at $1 million. But as soon as I hit that milestone, I immediately set 2 new targets. I'll reveal those in upcoming videos, so make sure you're subscribed. This channel isn't about get-rich-quick schemes or selling you courses. It's about financial literacy as a life skill, about sharing real lessons from someone who actually did what most people just talk about. Take the lessons and come with me on this journey to maximize wealth the right way. Which topic would you like me to dive into next? Here are 3 options. Option 1, a detailed explanation of my current portfolio, how it's diversified and why I chose these positions. Option 2, my take on whether investing in crypto is a smart move right now based on current economic and market factors. Option 3, more about the journey I came through, my earnings, challenges, and how I've built wealth over time. Drop the number of your preferred option in the comments below. I'm excited to hear what you want to see next. Don't forget to subscribe so you don't miss the next video. See you soon. Let's build real wealth together.